The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's make some money. Before you make money, you gotta learn how not to lose money. And today, we're going to discuss how not to lose money in Bitcoin. This is going to be a short one. This is pretty easy. All right. We're looking at a picture of Bitcoin. It's the weekly chart. And let's focus on this area here being, this is all April of 2021. So that's 11 months ago, almost a year ago. All right. So Bitcoin made a higher high. The price trended up. Well, momentum trended down. So this makes 2 points. One, momentum can trend down a long time. All right. So no, people say, I don't use no oscillators. You don't know how to use oscillators. Because it's trending down, it doesn't mean that you get out immediately. It means when trouble comes, there may not be support there to save it. So it's like a tap on your shoulder that, okay, the last days of this trending, the last days are near. Not here, but near. Okay. And so then you look for additional signs. But that's all technical analysis. It's a thought process. It's a deductive reasoning to it. That's entirely chart-based, okay? Based on the way the candles move. And in the school of thought that I'm in, which is Elliott wave theory, let's just say backup. Technical analysis was founded, I'm not going to say founded. One of the primary contributors to it is Charles Dow of the Dow Jones Industrial Average. Technical analysis has been around over 100 years. So whenever I hear people say, you can't time the market, no use trying, just buy and hold, I'm like, huh? What? Huh? You don't have to guess the exact top. You don't have to guess or project the exact bottom. And that's not what we're trying to do. We're trying to get most of the move. We're trying to get out when it's the most dangerous for technical reasons, okay? For repetitive things that markets do at the top and bottom. These are things that, we have data for 100 years, or at least 100 years, to show how this stuff works. There's been many people contributing to this discipline over the years. So no one's trying to guess the exact top or bottom, but we can absolutely get close. So this is one key divergence, okay? And this blue line here represents the 50% retrace area from this decline. It's common for prices to take a nice dive and then retrace 50% or more. Now, in Elliott wave theory, there are some exceptions to that rule. And without getting deep in it, this little shaded area represents the top of this area, represents where we could go in one of those Elliott wave exceptions. We may not get to the 50% retrace area, okay? But no doubt, this is a key area. This 50% retrace area is key. Because at some point in time, the chart looks like this, or back in, let's say, January or December of 2021, 3 months ago, 4 months ago, the chart, Bitcoin chart, looked like this, and this area was key, because this is where it dropped, and then it retraced there, fell, dropped, and it came through it. Okay, so you can see these higher lows. So that I could at some point in time, or back in December, the bulls were thinking, okay, we're going higher, and then it didn't. If price returns to that area, the psychology will likely be to sell, to do what they should have done here. They will join this party of waning momentum and send Bitcoin tumbling. The next technical area is of note. Using price action and Elliott wave theory is around in here. This is the candle from October. This is a weekly chart from the week of October the 5th, 2020. The low is 105. No, let me just say 10,520. Okay, 10,520.8. That's where we could go. I think that's where we'd absolutely likely to go. That's my very strong technical opinion, taking into account this chart and the fact that this symbol is Bitcoin versus the dollar, and the dollar is projected to go much higher. So that's strength for the dollar. And if we're comparing Bitcoin to the dollar, Bitcoin would have to be, in this upcoming move, would have to overwhelm the dollar in order for Bitcoin to go higher. And I don't see that happening. That's not going to happen. Okay? We're in interest rate rising cycles, and the dollar and the interest rate tends to trade together. Okay? So the dollar going up, and why and the interest rate is being raised, because the dollar is going to be more attractive because of other makeup. I know this is the end. What I'm saying is the opposite of what you hear people on the fundamental side say. Okay, it's a different approach. Okay, the Fed is responding to the environment. They're not creating it. They're responding to the environment. The dollar, because of bigger macroeconomic issues, chiefly like the price of energy. We have some major sectors like energy that's overbought. The price has to come down, and that makes the dollar more valuable, and the dollar becomes in demand to the world. So the dollar being in demand represents an opportunity for the Federal Reserve to make money off of the demand, the global demand increase for the dollar. That's why the interest rate is going up. Because the other currencies around the world most of them are about to do a nosedive. And those other governments are going to hide out in the US dollar. And the Federal Reserve is going to make them pay for it. You're going to pay for the shelter of the dollar. And that's what the interest rate hike is for. You cannot charge a premium on something that nobody wants. You only raise the price because you know the demand has increased. You can't sell people something they don't want for more money than they used to pay for it. It doesn't work like that. Okay? It's because of the presence of the demand for the dollar. That's why the interest rate is being raised. Because the Federal Reserve, they read charts too. Okay? They know how to read charts too. And that oil chart and that gold chart, it's in severe need of correction. And when those prices correct, it's gonna severely stress those other currencies. It's gonna make the dollar in demand. I know that's the reverse of the way you're usually hearing it. I know most people talk and think in terms of everything being a product of the Federal Reserve, that they can just create trends and make things go the way they want them to go. No, they can't. It doesn't work that way. We have a complex economic system with prices of commodity and the price of money, which is the interest rate. They all work together. But they affect one another. You can supply affects demand, and demand affects supply. Okay, but at this current state we're in, the price is already at the price of energy is already at unaffordable levels, and the path of least resistance is down. And the dollar and energy historically has had an inverse relationship. So when the price of energy comes down to be more affordable, that's going to make the value of the dollar go up. And the dollar going up makes it difficult for the other countries around the world to pay their debt. Because if the dollar costs more, it requires more of their currencies to equal $1. So they get poorer, basically, when that happens. So in order to protect their purchasing power, spending power, purchasing power, they hide out in the dollar during those dollar ascensions and crashing their own currency. So all of these countries play currency. We in the news they call it currency manipulation games. All countries do it, and they must. That's responsible behavior. Why would you sit there and watch your currency tank when you can move your money to something else temporarily? Temporarily could be 2 years, you know. All right. And for you Forex traders, you see that all the time. That's what you're doing. You're watching mostly the central banks of the world trade in and out of their own currency. That's what you're watching. Okay. And a lot of your products, those of us here stateside, the stuff that we get that's imported from these other countries, that price goes up and down on that item, you know, in large part because of the way that currency goes up and down and the interest rate associated with it. Anyway, all of that is going, I think, it's going to, I hate saying words like tank, but let's say it, tank Bitcoin. Say it with me, tank Bitcoin. Okay, cryptos. It's coming down. It's coming down. I think at least to this level. Now that's a near term optimistic story, a way to look at it. Now there is a within Elliott wave theory, wave count. If I was just to go with that, an argument, a technical argument could be made from an Elliott wave theory perspective that we would go below this level. That we could go below this 3,177 level from December of 2018. Below that, we could go below that. Okay. So there's like a void, a big window between, say, about 1,300, let's say about 1,400 and 3,000. It could fall there. But let's deal with first things first. I think the more conservative, let me put it that way, the more conservative call is this area, this price area right here, this window. I'd say from 10.5, let's say 10.5 to, is that 12.5? My eyes are shot. Oh man, I'm not gonna complain. Don't have to be here. Coming up on a birthday. Coming up on an Aries birthday, y'all. It's one thing that happens when you get older. You stop complaining because you know it ain't gonna get much better. This is 12.4. Okay. So 10.5 to 12.4. We got a little window right in there that we're likely to that Bitcoin is likely to roll over to. But not before. I think we're more likely to hit this area here, the top of this. Come on. Oh, the top of this candle here from the week of January 3rd. That high at 47,944. I think we're more likely to roll over there, like right here. I think we're more likely to hit that and die than we are to come to the top of this blue range, the top of this candle, which would be the 50% range. So we got two possibilities with this. Elliott wave, one argument within Elliott wave theory says, okay, we're likely to get here. But just in terms of the way price action usually works, you get a 50% retrace or more. So it could go higher. So you got a range, but holding on for dear life, get over it. Learn technical analysis, or wish you had. Peace.